Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, February 6, 2020. What we'll do here is start out with just a very quick overview of the broad market, since we don't have anything really significant to report today. But what I want to do mostly in this video is cover some of the trade ideas. I mean, that's where we make money. The market is one thing. It's fun to trade. It's fun to call the market. But the stock market, meaning, compilation of thousands of different stocks, or in this case, the S&P 500, 500 different companies, is one of many ways to trade. My preference is always is to focus on the majority of my trades. I will trade the markets from time to time, but most of my trades are individual stocks, sectors, ETFs, commodities, and any futures contracts that might trade those. So we're going to go into that, and again, the key takeaway here in this video, and I like to kind of loop back to this from time to time. I know there's always new people coming into the site, but the key to investing, the key to trading, it's all about this. I can't say enough about asset allocation and diversification. Now, there are two kind of diverse. Asset allocation is a way to diversify. What asset allocation means, you have different asset classes. You have stocks, which are basically ownership or equity in a company, and those your, GE, Apple, AT&T, whatever companies, Tesla, whatever you're trading, and then they come in all different varieties, of course, large caps, small caps, value, international. You can even subdivide those even further. So that should be one piece of the pie. Whether, and even in my opinion, whether you're an investor, actually, it's critical, most important for an investor. I've gone over this before. Don't want to digress in this video because I've dedicated some videos specifically to the benefits of asset allocation. There are studies, numerous studies, that show proper asset allocation is actually more important to the performance of your investment portfolio than is individual security selection. They've done that, by taking a look at the pros as well as individual investors. So I like to focus, as you guys know, if you've been with the site for a while, you're going to see things as REITs. You're going to see a lot of commodities. You're going to see me cover bonds, currencies, even things that aren't on here. Bitcoin, I put that in its own little asset class. Cash, of course, that's it should be part of a trading portfolio. I often talk about taking a full position in XYZ or on this trade or that trade. I do not mean my entire portfolio. I mean the percentage of a portfolio that I'll dedicate to that trade. Ideally, an ideal minimum diversification, you should have at least 10 positions. And what we do on right side of the chart, what I'm doing here is not by any means even close to a, this is an ideal portfolio. This is what you should have, in your IRA, or if you're an active trader. I throw out individual, trade ideas to supplement or complement what you're already doing on your own, whether you're an active trader or an investor. I do both swing trading ideas, active trading, even day trading at times, investing ideas. And we're going to get to a couple of those here. So again, this is, the important thing here. Don't put all your eggs in one basket. And then, you would subdivide it even further if you had another chart, like I said, of within that stock portion, the different sectors or the different individual stocks or ETFs that you have. All right, so let's move on and look at some things. As far as the broad market, what's going on today? We're up a little bit on the S&P 500. Another perfect back test so far of that trend line that was recently broken. Again, nice cleanup trend line off the October 3rd lows. Breakdown, back test, but we are above, as I mentioned. That 329 level was pretty important to me. We had a comparable level that was taken out the day before. That would have been, what was that, Monday or Tuesday? Yeah, this was Wednesday. We broke out on SPY above that level yesterday, and on QQQ we took out the comparable level, which was about 222 and change, depends which board I look at, about 223 we'll call it, and we're above there. So as I said, that was near-term bullish, and there's no other way to spin it. Bullish until unless we move back down below these levels and break below that trend line. Otherwise, we have a the larger trend that remains intact for now, and that's this one off the October 3rd lows in both SPY and QQQ. Successful defenses there. We had a short-term sell signal there, and never was able. We weren't able to, or Qs were not able to, or didn't take out that trend line. They found support there and bounced up. So again, that's it, and we'll focus on, again, where to make money. We look at the SPY, for example, the S&P 500, and I just showed you on a different board. Turn off all the trend lines. you know, impressive as this rally is, we go back here you can see we had two peaks here back in July of last year. And so if I measure from there to where we're at today, we're up about 10% in the S&P 500. That's over 6 months. And if we roll back even farther, you remember we peaked back here in early October of 2018. And from there, we're up about 13%. And as we'll go through these trade ideas here, you'll see we have trades that have done 2-3 times that or more in a matter of just weeks or months. And that's, again, where you're going to get more bang for your buck on the individual stocks, sectors, commodities, things like that, especially those that have both more profit potential as well as better, risk-reward profiles. So 401k money, sure, that's been doing great. Didn't think the market would get this high, this far without a deeper correction than we had. Again, this one may not be over. I'm going to get away from these charts here and start looking at the individual trades. But again, breakdown, back test. So we'll see where we go from here. We, regain that trend line, then you don't have a back test. That's no longer resistance if it's taken out. But as of now, it is, and we continue to diverge, pushing up the new highs. While these indicators are severely lagging, you can see the PPO and RSI well below the highs, their previous reaction highs, while the SPY, at least prices on SPY, are above the previous high. That is negative divergence. But again, negative divergence, I often say, is not a sell signal, just like overbought is not a sell signal. They're just things to watch for. And then if you do get the sell signals, it'll help indicate just how far you might drop, especially when those divergences get quite large, as they have grown now at this point. Okay, now on to the things that will make us money. Certainly not the market lately, at least not for me. I had a couple nice short trade on the Qs when they dropped and reversed it long, and in that position, so I'm pretty much giving back what I made on that first drop and a little less, because as I think I told you guys, it was pretty detailed. It's not an active or official trade. Please know the difference. If I had a high degree of confidence, it would have been. It's just what I call unofficial trades when I throw these things out. Breakdown there, that was about a 3% drop. Reversed long, went back, scaled back in here, and then it popped up. So the short and the long combined, I think that was about a 5% gain on the drop in QQQ, and then the covering and reversing it to long there, and now giving back quite a bit of that. And somebody asked me today, I'll probably, and again, don't do what I'm doing, because this is just one of many small positions. Again, QQQ, that short I have is a starter position, as I said, and I would not and did not add to it unless it showed me more that I wanted to see on the bearish side. So I'll make a decision today. I don't think if the market can't reverse into the close, whether or not to hold it. But again, it's only down a few percentage points from where I entered the last long trade. So to me, that's well within, especially on a fractional position, well within my loss parameters. So I'm okay with that for now. Still think we could get another jog down here soon. We'll see. Now, it's no particular order. I'm just going to go through these. I wrote down some of the things I wanted to cover on my scratch pad. So again, not in any particular order here, but I'll go over these. I did give you an update on this one today. GBTC, that's our Bitcoin proxy. There were actually a few other ways we traded Bitcoin. I'll go over those in a second here. But this one is a direct play. This is, tracks the price of Bitcoin. Does a pretty good job, not a perfect job because it can trade at a premium or discount. But we hit the third and final target for whatever that was. I mentioned it today on the site, whatever the gain was from right here. We entered about 360, exactly 864. That one was posted as a trade setup. I often get questions from new members, how does it work? Ideally, I'll try to find what I call a trade setup. And in that case, it was back here. A setup is a potential. And please, there's a very important distinction between an actionable trade and a trade setup, because some trade setups never materialize. They don't trigger. A trade setup is a trade, a stock or a ETF or anything setting up in a technical pattern, bullish or bearish, in this case bullish, that pending an entry on a breakout of that pattern or a particular resistance level or some other type of trigger. In this case, it was any break above 863, so that means once we hit 864, it was triggered, and that one right there. So we went up, hit the first target real quick, went up here, hit the second target right here, and now we've hit my third and final target. There's a lot of the questions that I get asked are in the FAQ page. So it's about what, about a 40%, 39% or so gain. The FAQ page, let me show you that. Okay, and the intent of this video, I don't want to get too far off topic, but I've spent a good part of today, and I'm going to continue to do this, guys. I'm answering questions from the support, the contact form. I'm behind on that. I've caught up now. I've got a couple, last couple weeks, there was a lot of stuff in that inbox, and my apologies. So I've gotten back to quite a few of you, and I'll continue to do that today. That's the contact form. But before you click that, here's the FAQ page. And there's a lot of questions that can be answered for you there. And they're subcategorized: general question, membership and billing questions, any trading related questions. For example, how are price targets for each trade determined? And then I go on to say that the final target is set at a level that I think either the risk reward is no longer favorable, or there's quite likely that may be the end of the run. Sometimes, but not always. And there's also ETF related questions as well, and all that. Or you can look at, of course, all questions. There's a way to do that somewhere. Oh yeah, no, that's the general questions. Oh, that's right. I removed the see all questions to make it a little more streamlined there, so you can catch that. Okay, so I wanted to just point that out, and then also keep in mind, when you're logged into the site, and I'm on this actually, I have another screen up that I'm logged in on. You'll see a little user icon up here, and you click that, and that gives you your membership information, things like that. So let's get back to the trade ideas. All right, so on this one, where I was going with that is, I said in the comment section, look, I think we'll probably get a pretty good reaction here. I define a reaction as either a consolidation when a price level or target or resistance level is hit, meaning, you might look something like this. Now, Bitcoin's volatile, so you're not going to consolidate right on the 12-ish area. Remember, I set my price targets just below the actual resistance. In this case, that line was at $11.95, so we'll call that $12. I don't try to milk every last cent out of there in case the sellers step in early. So that's it. And again, as an official trade, it's now removed because the final target was hit. If either the final target or the stop is hit, that trade is then removed. But as a subscriber, feel free to bump me if you want updates on that, and I'll let you know. I shared my thoughts on it when I closed it out today, and that final target was hit. If we can power on through there's certainly an uptrend going on right now in Bitcoin. Make no mistake about that. This is the definition of uptrend: a security making a series of higher highs and higher lows, and that's what we're doing here. So you want to set a stop and let it ride. If we take this level out, it could very well work its way up to that $17 level, quite likely, or quite possibly beyond. But as of now, here's what I see, and this is why that final target was there. I see a pretty good resistance. If you're around, you can type in GBTC on the search function, or even better, go in the on the site here, go down here. If you want to find anything you're looking for on the front page, so gold or silver members, come here and then type in GBTC, hit enter, and you're going to see all posts ever made on GBTC. And then you'll see that when you go down the line back here, oh, wrong chart, back here, this was a very important level to me, where we're at now. On both Bitcoin futures and Bitcoin, and I said a break of that, which I was expecting and positioning for, would cause the next drop in Bitcoin, and that happened. So we had a sell signal there, and we had a big correction. So again, that was my point I'm trying to make, is support once broken becomes resistance, and that was a very important support level there. It formed this triangle type pattern, a descending triangle like this, and when it broke, it gave way, the dam gave way, and we had a big drop down in Bitcoin. We rallied back up, tested it once. That's another reaction there. So that's what I look for to define these support and resistance levels. And so it doesn't mean we can't go through it. It just means it looks to me like a pretty formidable, significant resistance level. And Bitcoin, remember, if anything's going to trade to the technicals, meaning the chart, instead of fundamentals, it's going to be Bitcoin. Why? Because Bitcoin doesn't have any fundamentals. There are no earnings. There's no earnings per share, or cash flow, or anything like that, like a company, like a publicly traded company, like a stock. It is just there's supply and demand dynamics like anything else. But again, traders are going to quite often flock to the charts. So there's my views, and that's why, so personally what I did is I took profits on my Bitcoin. Sometimes I will set a stop and let it ride, and I mentioned that in the post today, because trust me, this little sucker, when it wants to run, it can run. It could blast through there and head on up there. But what I still have some of, and I'll monitor these and maybe pull the plug, still in this one, Riot, I wanted to do an update. This was another trade proxy for Bitcoin, what I call an indirect proxy, because Riot doesn't hold Bitcoin. It's a blockchain company, use blockchain, about using, all about blockchain technology. And to me, what I'm seeing here, again, we had I can't remember exactly where we went long. I think I held off. That was the breakout, by the way, down here, the downtrend line, bullish falling wedge pattern. If I recall right, the entry was on a break above 130, and we already hit that first target. Believe this is an official trade. I threw some of these Bitcoin proxy trades out as unofficial trades, and that doesn't mean, sometimes it does mean I like an official trade. I usually have the highest degree of confidence in, but in some cases when I cover a sector, guys, keep in mind, for Bitcoin, for example, and there's a lot of names, or like the lithium stocks that I covered, I've been highlighting for the last few months, and there's so many that stand out. Can't get them all, so I say either trade the ETF or I'll share my favorites. And then what I like to do personally is take a shotgun approach. If you have enough capital in your account or the time and inclination to build a diversified portfolio, I do that with the cannabis stocks too. You take a what I call shotgun approach. Ignore what I'm doing. I'm just looking at a chart, and I don't know why that divergence line wasn't there. And that says, so instead of taking just GBTC or just Riot, take also overstock.com. Oh, and before I leave Riot, it's kind of going all over the place here. That's it. So that former first target, which we hit shortly after entry, I think a day or so, there at 150, you can see this Riot has just capped. That 150 level has capped all the advances. That's just an intraday pop right there. And again, we close the day right on or around it. We're there again around the 150 level. So what I see here is a consolidation pattern, potential basing pattern here. Bullish if it can break out, should open the door up to that second target there, but not so good if it has a solid break to the downside. We had a couple whipsaws. That's the nature of these very volatile stocks. If you're not familiar with Riot, it'll trade double digits in a day. This is not grandma's AT&T stock of yesteryear. Blue chip stock. It's anything but. So again, the key, if you're interested in this or any trade idea on the site, go back to the archives. Where was I here? Go back to the search all front page posts and type in Riot, and you can see everything that I've ever said about Riot. Anything I've covered it in videos, trade ideas, all that on the front page. And if you want even more than that, if you're a gold member, type it in here. Do use the search function, and that will call up any mention of Riot, including those in the trading room as well. So if I type in Riot, all this stuff here, some of these are front page posts, and some of these are mentions and trade setups and other things in the trading room right there, either by myself or others. So that's how you find what you're looking for on the site. That's one of several ways. Okay, moving on to the next one. There were a couple others that I consider Bitcoin proxies. Overstock, yes, this used to be like an Amazon.com. It still is. They have the website, but the founder of Overstock, Byrne, was that his name? Invested heavily into blockchain technology and things that are crypto related, and so therefore this one has tends to trade in line or not directly. Again, an indirect proxy. But it tends to move ebb and flow with Bitcoin, and I had a similar setup too. Around the same time, Bitcoin bottom, bullish falling wedge pattern right there, breakout, and it's been moving higher. There was a minor downtrend line. That one's not very significant, not very well defined, but I'll leave it there. And for now, it looks okay. It looks good. We had a divergent low, positive divergence or bullish divergence. Just like at the high, we had negative divergence. That's what I look for major tops, coupled with sell signals. Positive divergence down at that low there before. So these are the big trends. And this is what I'll try to capture in swing trading or sometimes trend trading. And this could be a major bottom just like this one was. And so far, it is certainly, there has been a trend reversal. If you look at it this way, we had the breakout there. You can see I had 716 resistance just above it. I talk about this often. This is, I think, a great takeaway things that, I give you things that I've learned over the years. Quite often the hard and costly way. If you're eyeing a pattern like a bullish falling wedge like this, but then you have resistance level just overhead, it's the safe bet is to wait till the latter of the two is taken out, because if you break out of the wedge like you did here, you compress for a little bit, and then finally we went on, and once 716 was taken out, that's where you had the big move up. And of course you hit the first target there, 915 was hit, pulled back. But the bigger picture is this: if you take a step back, whether Bitcoin pulls back here or not, it is in an uptrend, as I just covered a minute ago, clearly in an uptrend with zero signs of reversal. We're just at resistance, that's it. This one as well, breakout, pull back, and it could be in a new uptrend. So you can see there's a little bit of support just below right here. I'll give you a level if you're in it. That's the point of me doing this video. I want to update the trade ideas. Again, I can't remember. This one might be unofficial because I don't see the stop there, but I gave you targets on it. And if I do T2, it means I've already adjusted the target for an optimal fill. If you just see the resistance level, that the line puts it up there. If I show the resistance level, then those are unofficial trades. You want to usually sell your long position a little bit below if that's the level you're targeting. It may not be. Again, if you want to know why I list multiple targets, it's all in here. Trader related questions. Why do some trades list multiple price targets? It's all there. All right, back to where we were. Next one up was MoneyGram, MGI. Remember, the site had thrown this one out to me a couple months back when I was focusing on Bitcoin, Riot, and Overstock, which I just covered, and I liked it very much. It had a bullish falling wedge pattern. It was at support, $2 support. So here's one. I've been trading. I still own this one, and I like it. You can see it's an unofficial trade. Why? I mean, we had enough coverage in the sector, and I chose Bitcoin as an official trade, and I think that Riot as well. But official, unofficial, I like this one very much as well. It looks good for now. That could change again, especially if Bitcoin corrects. But here it is. You have a clean bullish falling wedge. Very, very good support. Look at all these reactions down around that $2 level. Yeah, it's moved through there, but still a lot of reactions along there. Breakout, impulsive leg up. Pull back to back test once again, $2 level. This has been a gift, buying this stock at $2, and then riding it up, and then if you sell it, if you've held it, then you just come back to where you started. But again, a lot of these resistance levels. So from here, the fact that we've already broke out as of now, and unless proven otherwise, which would be a break below $2, I'm viewing this as the initial leg up, corrective wave, and this is probably the start of a next leg up. My convictions aren't as high right now because of the fact, like I said, Bitcoin has rallied into significant resistance. But so what I'll do is I'll continue to monitor this trade. If Bitcoin starts to correct, I'll tighten stops up or just pull the plug on this one. But I just wanted to mention, it is possible to see Bitcoin correct. MoneyGram has its own things going on, and it's not solely related to crypto. It's MoneyGram. They cash advances, things like that, wire money transfers, stuff like that. That is also a reaction high right there around 284. Just keep that in mind. So if you want to know where the next objective buy point is, it would be on a break above these recent highs right here, a convincing break. And again, next target there, 322. Maybe target, just if that's what you're going for. Set a sell limit around 319, maybe 320. I think it'll come pretty close. And or you just trail stops up, let it run, and this one could easily head up to that 391 level. That would be another, from where we're at now, about 49, almost 50%. Okay, next up, PBYI. I updated it yesterday, and I mentioned it a day or two before in one of the videos because it was starting to move. We started to see traction here. As of now, okay, it's taken a little breather today. That's fine. It's still above. The first target was 1235. The actual resistance level is 1239. Ideally, it should hold that level. That was, as I often say, resistance once broken becomes support. So that would be the optimal scenario. Maybe it wants to flag here. It could also come down here, and it wouldn't really hurt this chart too bad, the technical posture, if it came all the way back into 1090 area. Obviously, if you took it here, that's not going to feel good, so you might not want to let it go that far. Again, we were in long in this one somewhere back. I think the entry was triggered, if I'm not mistaken, right here. Yeah, I believe so. And then it kind of consolidated sideways. I already did an update there. It's in that thin zone, so if it can hold here, if the market holds up, the biotech stocks hold up, and sometimes you don't even need that. Some of these biotechs can march to their own drumbeat with whatever's going on there. And so again, that's final target is 1955, and I can say that I probably will not extend that, but some of these biotechs can go like rockets. So if you want to use the old rule in trading, which is cut your losses and let your winners ride, no problem. If it gets up to 1955, set a stop somewhere below. It's volatile. If you have a 2% stop loss on a stock like this, you're going to get shaken out just in the day-to-day grinds. This stock will go up or down 10% or more in a day, no problem. It's went up 30+% in the last 2 days before today. That just shows you the nature of this beast. So you need to know what you're trading and then adjust your stops and position size accordingly. Because if your question was, Randy, why would I ever allow a 10, 15, 20% stop? That's insane. No, it's not insane. It's insane if you're only targeting 5 or 10% on a trade. But if you're targeting, as I was and am on this trade, a 120% or so return, you can allow yourself a 20% stop loss, and that is a 6-to-1 risk-reward ratio. That's phenomenal. You could allow a 40% stop loss and still have an attractive 3-to-1 risk-reward ratio, meaning you're risking a dollar of loss for every $3 of gain potential. And how do you do that? If you say a 10 or 20% stop loss is crazy, easy in my opinion. You just take a smaller position size, very small, to the point where you're not going to lose any more than you'd lose if you took QQQ or SPY or Apple or anything else using a 5-8% stop loss. That's what I call beta adjusted position size. You're accounting for the above average return potential, because if you hit that 100 whatever it is, 120% gain, yeah, you didn't have as much into the position, but you still made as much or more in dollar terms than you would have made on an average size trade. So that's, to me, a very critical component of investing. From what I've seen, especially those new to investing and trading, it's just taking two large concentrated positions. One of those positions goes against you, and it's going to do some damage, possibly irreparable damage to your portfolio. So again, diversify. Don't put all your eggs in one basket. Invest if you can into different sectors, different asset classes, and one day one's going to be down, and hopefully 2 or 3 others will be up, and it's going to smooth out the bumps in your portfolio. Let's roll into commodities real quick. A few more things I want to cover, and we'll wrap it up. I don't have a lot more, maybe not even a half dozen trade ideas from here. Crude oil, still, I suspect, pounding out a bottom. We never had one of those strong, long candlestick shadows there so far. So we may not have washed out yet, but maybe we're starting to see volume really ramp up. That is indicative of a selling climax. To me, at least at this point in time, and this could change, but as of now, the most important thing is crude is holding support. It was in free fall. Remember, it had a lot of downside momentum going into this drop, and this is a major support level. Right here it was support. There were reactions, big gap there, support, and see what happened back here. It fell to that level, this 1050-ish level, and it didn't bounce on the initial tap. It did bounce, but it came back, tested again, and then from there that's where the rally set in. And before all was said and done, in just a matter of less than a month, it rallied up about 20%. Here it was a one and done situation. That's why I stepped in the other day. Sometimes it's a one and done, sometimes it takes a little time to pound out a bottom, and sometimes you break support and it keeps going, and that's why you use stops. You don't fall in love with a trade just because it's bounced here out of the last several times in recent years, other than this meltdown. Remember, that was a meltdown in the markets and everything else in the fourth quarter of 2018. But for the most part, at least since then, each and every fall back to this level has held and acted as support that resulted in rallies of 20% or more. This is probably 30, 25, 30. doesn't matter, I can measure it out, but showed you that was 20, and that's more, and so is that one. So there it is. That's the reasoning for the trade. But again, this in no way, shape, or form even comes close to guaranteeing that that must hold again. I trade, it's objective, I take these. If it works, great. If it doesn't, I move on to the next one. And that's one thing you might notice on this site. I cover a lot of different securities, a lot of different asset classes. And I might be covering something like crude day after day after day, trading it long, short, in, out. And then all of a sudden I may not mention it for weeks or even months. And I'll do that when the charts no longer appear clearly bullish or bearish. Some things get in these trading ranges and they chop around, and this is what you want to stay from. My attempt is to try to get in and catch these, rips and dips, these trends, and kind of avoid and sidestep anything that's doing that. And if I don't catch a trend, maybe I didn't see it, that's fine. I move on to the next one, and I'll just wait for that stock or that commodity or whatever it is to come to me, to set up in the kind of chart pattern that I like, that I'm comfortable with. So that's crude. As of now, still looks okay. We're still in the trade. It hasn't hit the official stop. Again, these are just a suggested stop. Depends on the entry that I posted originally. If you bought it down here, you can allow for a lot wider stop. If you're in higher, you might not want to let it go down that far. It's up to you. And even if you entered where I posted it the other day, you may want a tighter or a more liberal stop, depending on your outlook. But that's it. Breakout. So far, it's above the breakout of the downtrend line on the 60-minute chart. And CL for your crude futures traders. And I like to keep it, even if you're not trading crude futures, probably a good idea to keep an eye on this chart. We have a nice downtrend here. You can see either line, draw either one. And this is a breakout and a backtest. That offers an objective entry. Doesn't guarantee the backtest will hold, but that would be an objective entry here. We still have the divergence. Crude's looks to me like trying to pound out a bottom, and I think if it can pop with conviction, this 50, we'll call it 52 now, because it popped a little bit above it right there. I don't know if you can see it well in the videos. I'll tighten it up here. There's a downtrend line breakout, backtest number 1, thrust up to around the 52-ish level, a little bit above, come back, backtest number 2. So I think if it can clear this recent high, that should open the door to this next target here, and quite likely beyond there. And on a related note, they don't always move together, but they're certainly closely related, natural gas and crude oil. I still like it. It needs a giddy up. Hasn't done so yet, but the charts still look constructive to me. So there's a difference of a constructive looking chart, bullish looking chart, a bullish setup, and an uptrend, not to be mistaken. This isn't a downtrend. I made it clear, just like crude, it is a catch a falling knife bottoming trade. That's not for everybody. I've heard, if I had a nickel for every time I heard somebody say you can't call a bottom or top in a stock, I'd be very rich, or at least I'd have a lot of nickels. That's what I like to do. Am I right every time? Absolutely not. But what happens is you step in, and when you do that, you catch those major turns, you get the big move. Trend chasers wait for an established trend, and by that time, crude, natural gas, oil, whatever it is, usually up 20, 30%, and that's usually by the time I'm out and move on to the next one, and then that trend may end or not shortly after that. So this is my trading style, and again, the basis for that trade, for those that didn't catch it yet, and we're using UGAS as the official proxy for the trade, but I know a lot of you trade NG futures. You had a bullish falling wedge pattern. We broke out right here, ran up, we back tested the wedge, and we've been moving, consolidating since. So we're kind of building what I believe to be building energy, sort of like a coiled spring, like anything else. If it doesn't work out, when will we know? Well, it's turns down and clearly takes out this low impulsively, even then it's going to keep divergence in place. But ideally, after a breakout like this, the most bullish scenario will really help this trade and open the door for a big move up here to that 2096 target. You may not think it's much, but that would be on nat gas futures over a 10% rally. If you trade NG, I don't have to tell you how much that'll put in your pocket. If you don't have the the NG is leveraged like any futures contract. QG is a smaller version, trades on the same levels, or of course you can trade any of the other ETNs that track them. But Where I'm going with this is I think that around that 190-ish level there, it says 188.8 there, so we'll call it around 190, about where we're at now. If it can pop much more than that, it should run. I think it should run. I see quite a bit of reactions along that level there, and most recently that's where the level that's capped all these advances. So if it can pop there, you probably see a pretty strong candle up through here to that 1.954. That's the first target on NG. Chances are we'd get a reaction there, but when NG wants to run, it can run. So that's up to you whether you want to, if it happens, you take the quick buck, or you just raise your stops, hold on. It might need a little consolidation or a little pullback to power through, or there are times it just blasts right on through. So that's up to you how you trade it. At that point, probably get a decent reaction if and when it gets there. And to look at the trade for the proxy using UGAS, remember 3-time leveraged, so you have to factor that in. Don't know if the lines, sometimes these lines drift, my trend lines. I think that's the same line I had. Yeah, that's it. There it is. Breakout, backtest, just like NG, natural gas futures, and so far a constructive chart. Again, I'll put a higher weighting on the futures than I will in these ETNs because you get decay on these. But breakout, backtest, moving up, sort of in a little uptrend, but we'll still call that a consolidation, a potential basing pattern. So needs a little more upside, I think, to punch up here. That should open the door for a move up to the first target there at 50.72. Probably get some consolidation there. You can see that's a lot of reactions there. That's resistance, big old thin zone, and if it pops there, I suspect it'll be a relatively quick move through here. Not straight up. Don't hold these arrows to exactly that. There'll be some squiggles and zigs and zags along the way, but I think we'll see a pretty quick move up to that level there, and that's not bad if it's hit. Remember, I forget exactly where we were in. Oh, there it is. There's my entry price. 45.73 was the entry trigger. So that happened over here. And if that level is hit, the final target right now, that would be a 44% gain. Get in, get out, move on to the next one. That's my thoughts as of now. But as I always say, the charts are dynamic, and so is my analysis. So if and when natural gas starts to approach that level, I'll take a look at the charts and give you my thoughts as to whether there might be some more upside or time to get out and move on. Especially with this leveraged ETF, you don't want to get caught in a consolidation period. That's when you start to have the decay eat at the returns. Okay, couple more. I know it's a long video, just trying to get it all in there and get these out to you guys. One that I've mentioned, this kind of loops back to what I started with that asset allocation model. Don't put all your eggs in one basket. And this one plays in well for, I think, investors too. If you're not a very active trader, you're here to supplement your long-term funds, 401k IRAs. This one, GCC, and I've highlighted it in the past. This is a kind of a one-size-fits-all commodity ETF. So think of it like a mutual fund, same difference. It's holding various commodities. Here's a mix. I haven't updated this recently, but it has the soft commodities, grains, precious metals, energy, livestock, industrial metals, natural gas, you name it, it's all in here. Crude oil, all that good stuff. So it's a way to have commodity exposure to your portfolio. I've mentioned it in the past. Again, I liked it back here. It had a divergent low, bullish divergence, and it's been in an uptrend since. And I'm highlighting it today because it's pulled back to resistance. So after that divergent low, we went on. We've been in an uptrend, moving up. Got kind of ahead of itself, had a nice rally. A lot of this correction that you're looking at recently, that was about a 12% gain. Remember, it's diversified. It's not going to go up as much or down as much as any of the individual ones, but it does have a pretty heavy weighting in energy. So what you're seeing there is largely due to that drop in natural gas and crude right there, particularly crude oil. And that's it. It kind of also hit resistance. I should put another line at that high. It had a previous reaction high there. But I'm highlighting it now because, well, as I think it's objective to be long crude oil and natural gas here. A little more work to be done, but it also pulled back. That's a level I believe that's been on this chart for quite a while, 1740. You can see a lot of reactions there. Again, it's not mere coincidence that crude also has a lot there, but these are different points in time too. These are 2018, early 2019, and then they had this washout move here. So it does not mirror the chart of crude. You have a lot more diversity. And so the case to be made, step in long here at or above. It's somewhat above, but not too far. It's at 1774 right now. That level 1740. For longer term playoff support there. And you'd want to stop, somewhat below that. You got to give it a little room. Sometimes you have these little false, whipsaw signals, and this could be what I would be looking at and viewing is the potential for a move back up to the top of this range. Because if you take a step back and look at from mid 2018, this is one big trading range right here, with the exception of that brief, pop washout move down below. But we've had a lot of reactions above and even more down below. And so even if this just remains range bound for another 6 months or more, just to move up to the top of the range would be a nice swing trade. And then ultimately, if it goes on to break out, if commodities can really get some traction, I'm still eyeing those. As you guys know, for a while back, there are times I'm constantly updating various commodities, trading them, and then I'll step back. The ones I'm focused on right now, as I've said, are really the energy commodities, and a couple ag commodities I should get to. I know this video is long, but I had one more I wanted to show you that I've traded on and off quite well in the last few years is coffee, and that is coming up also to really nice support. And coffee is starting to look interesting again for the next long side trade as it comes down here at around that 30.68 level. It may not even get that far. We're very oversold, and I like the chart of coffee futures. Here's a yearly chart, 1 year chart. 1 year long, but 2 hour candles. So these are 120-minute candles, and you can see this is a support zone right here. You can see on KC. KC are the symbols, ticker symbol for coffee futures. It's up here. Somebody asked the other day. The symbols are always up in the upper left-hand corner if you don't see them in the middle of the screen. So from about 96 to about 89 or 96 to 89 cents, somewhere in there. That's the support level for coffee futures. Dipped a little bit below there, but you can see that's where you wanted to step in over the last year, and doing so, treated you well, got you in. That was not the biggest rally, but even then, if you were there as an investor, you held it on, you went a little bit underwater, and then you caught most of that. And again, I highlighted it back here. Divergent low and a trade idea back then on that run, and I think on this one as well. So here we are. We're there again. Potential divergence setting up. If you want to know what I think happens, I can tell you sometimes you don't get that one last thrust down, so you may want to start scaling in. But from the look of this, I could easily see a little bit more downside to come in, put in a nice divergent low here, just like we had back here. It's not all marked up, but you had positive divergence there. So you hit that level, and then you came down, made a little bit lower low to give you a divergent low on these indicators. And that's when the bottom was set in. So it could look something like that. Or everybody else sees it and they step in now and they buy. So, maybe a partial position here, scale in down there, not too far below that level. And really at this point in time, I'm not even focused on price targets. I'm more focused if the bottom develops. Look at that as a swing trade up to at least this level here, that 105 level, and quite possibly more. So that's coffee, and I think I showed you Joe already. So let's see if there's anything else. Yeah, I'll leave it here. I got a couple more on the list. I was going to talk on Tesla. I'll maybe get to that later. Still eyeing that one. There's a potential actionable trade. Somebody in the trading room pointed out I think it was an Evening Star Doji on Tesla. But here's cow. This is a livestock ETN. Cattle, live hogs, things like that. And this one it's right up on, slightly below that previous reaction low back from September 2019. Divergence on the PPO, so this is another one that might be okay there. I'll have to study the charts I wanted to take a look at cattle futures and live hogs and all that first before pulling the trigger, but this one has some potential here as another bottoming play in the commodity arena. We're going to wrap it up here and get these out to you, and let me just double check. Yeah, that's most of what I wanted to get. So anything else that stands out, I'll get it out to you in a separate video or post some chart images on the home page. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.